Hey, good evening, everyone. My name is Sage. I'm one of the traders here at High Strike, and today is just going to be part of my daily journaling process of trades that I've took, things that I see in the market, and just some updates of things that are going on in the background. So it's no secret if you've been following along with my videos, my analysis, and what I've been developing. Um, I'm looking to improve on my trading system, and not just my trading system, but my methodology and improving not just my entries, but overall my entire process. And that's going to be a persistent thing that I'm going after. So I'm going to share with you the two trades that I took. One trade that I took was a shallow trade. I lost $750 on one position. It was a 20-point stop. So $750 seems like a lot of money. Not really. It was a 20-point stop. The next trade that I took after that, I made just a little bit over $6,000. So ultimately, two trades, it was a net positive. So my win rate for today was 50%. You're going to see some of the significant developments that I'm trying to push. And I have another iteration of the trading system that I'm already working on. I won't share too many of the details, but I will talk about how I'm looking to improve what it is that I'm already doing. So just to start off, right, I'm moving more into the quantitative realm as opposed to just being 100% discretionary, just using the same indicators that basically everyone else has always used. I'm moving into that realm more so because I think that we can be more precise with statistics and mathematics. And plus, the institutions are doing it. 60% of the institutions are using a significant amount of computing power, cloud, leveraging technology that we have, AI, machine learning. They're leveraging all of that in order to make concise decisions, with high frequency trading and their implementations. They have the resources to do it. They have the servers. I don't have a $100,000 server here, but I can at least look to be a little bit more rigid in and how it is that I trade. So with some of the things that I'm going to share with you in this video, if it's something that you enjoy or you see, there's some practicality to it, leave a comment or ask me a question. Let's open up a dialogue. Any feedback is more than welcome. So if you see maybe there might be an implementation or something that you might say, hey, there's kind of a hole here, I'm very, very much welcome to feedback, because quantitative analysis is all about open to feedback and being susceptible to some vulnerabilities, right? And that vulnerability, you want to try to fix that problem with a computation. So you want to compensate that with either a filter or something that you might not have thought about. You got to think outside the box. Cool. That's my introduction. It was long. It was very long. Hughes and SPY pulled back. Jerome Powell basically saying, not really feeling this tariff situation. So in layman's terms, without being overly technical, he said, we're maybe not looking to cut anytime this year. We're going to be data dependent, as he has been saying for the last 4 years, and strictly looking at if we're going to be data dependent as we have been. I'm not really seeing a rate cut, and we have to see what the data reports are going to say after the tariff implications ultimately take hold of the market. That's what's been happening. So let's look here. I was looking at JP Morgan, but let's look at QQQ. I've said this a couple times, depending on when you watch these videos, if you're watching these videos succinctly. I said that I'm interested in 430 for an area of support. So 430 is right here, right? I'm looking at this zone as potential buyers, institutional buyer. I'm not interested too much in retail buyers. If I get activity there, then I think I have something that I want to take. Notice the volume, right? Even though we sold off, it seems very weird to say this. I made this comment in yesterday's video, but if you're a retail trader and you're looking for 100, 600 point moves intraday, that's not normal. That's not typical. So in my experience, doing this for now 15 years, if you're looking for those kinds of moves, it's just because your rubber band of expectation has just been expanded way too much. That's not trading. It's literally catering to a little bit of a thing that we have psychologically, where we're looking for excitement and we're looking for something to hold our attention, and then we get a dopamine spike with all of that volatility that's happening in the market. We want to be careful with that. We really, really want to be careful, because that is ultimately going to it's going to block your field of vision. It's going to tell you, I want to take some trades, but they're not really technically based. They're more emotionally based. So be careful with that, right? If we remove all those impedances, if we just focus on just the technicals, I think around 430 back down to possibly 410, we have something that we can trade off of. We get back down to those levels. How much of a percentage drawdown is it from where we are? That's about a 7% drawdown from here. We're trading 4% intraday, right? So 7% is just another Tuesday on QQQ, it seems like. If that were to happen, then I'm looking for capitulation signs, and I'm specifically looking for incoming volume. So important. Everything that I do is volume and volatility based, and it's also institutional based. So it's depth of market. If there is order flow that's coming in, and order flow can be shares, can be options, whatever the case is, I want to pick that up on the chart's not going to tell me that. My third party software is going to tell me that, but I want to pick that up. But one thing that y'all should be paying attention to is just how much volume is on these sell-offs, these roll-offs, or when we're jumping into the market. There was a huge little capitulation feature that came in 3-4 days ago when supposedly we were going to pause on tariffs. So that has subsided substantially. Why did the market pull back today? Specifically because of the tax hit that NVIDIA incurred. $5.5 billion just to ship out product out to China. And why did the rest of the market sell off? Well, that means that no one really is safe, right? All of the semiconductors or all the products, especially high compute products or high valuables, chips, basically chips. If those are going to suffer, if they're going to suffer through export tax, then really no one is safe. That's why the Qs pulled back as much as they did. You're going to see in a little bit when I talk about the trades that I took, you're going to see that bounce that we saw, and we'll talk a little bit about some of the developments that I have underway for my trading system. That's Qs. What do we have here on Google and some of these other bigger players? I'm still holding on to my Google shares. I think Google is fairly valued. There's a couple of people on CNBC and there's a couple of people off of Bloomberg or just financial analysts or financial professionals that have a lot more experience than me saying that Google is not where you want to be putting your money. They're undergoing a couple of significant lawsuits. However, in my opinion, based off of valuation, I think that Google is more fairly valued than some of the other companies that are out there. I'm still highly interested in holding on to my Google position for longer than 6 months, probably even longer than that. I would recommend that if you are not in Google, I would probably say back down to 130 would be a level of interest if we do get down that low. Next, what I will discuss, I'm going to go through this fairly quickly. Right? If you're watching me in 2x speed, then you're really going to fire through these things. My recommendation would be about 170. So 170 is right on the 200-day moving average. We've penetrated basically the 200-day moving average on everything else, almost, right? Almost everything else. So why not here on Amazon? Areas of interest for me, put me back down, plot me at 155, and then probably about 145. So in terms of percentage significance, we're back down 8% and then back down to about 15%. So if we do pull back that much, it's okay if you don't agree with me, but I'm a leveraged shares trader. I know, right? Everyone, you're an idiot for trading leveraged shares. Fine, you can think that. No problem. You can think that. All that matters to me is risk management, and if I'm going to be successful on it, which I have an extremely good track record with leveraged shares. It really is a phenomenal track record. So let's go back here. If we trade back down to 21 and probably not looking to get in there because we're only 3 points away. I'm looking sub 20, maybe even in the teen areas, about 17. I'm interested in buying leverage shares on Amazon. Probably going to hold that for a little bit long term. But Sage, you don't understand the decaying factor here for leverage shares. You haven't done your research. You don't know the statistics behind it. Yes, I do know the statistics. I do know the significance of the data. I get that. But that still is not going to be the driving factor why I'm focused on leverage shares. It's just because it's severely depressed. Anything that's severely depressed in the market, I have that switch in my brain that tells me, out of experience, anything that's severely depressed that actually has value behind it, probably want to buy into that. Am I going to hold this for 15 years? No, of course I'm not going to hold it for 15 years, but I'm going to hold it long enough where I can outperform the market. So that's my Amazon deposition there. Okay. What else am I looking at? Specifically, I know a lot of traders have been asking me about Tesla. I'm not that interested in Tesla. I just went over this in my Power Hour session. I'm not that interested in Tesla. They're going to have earnings here in a little bit. This is not sufficient information. This is not, 100% infallible. It's not going to give you depth of market information that is completely granular and accurate to a T, but it gives you a sense. It tells you there's a lot of short positions there for Tesla. If we start trading, I think at a fair valuation on Tesla. I'm sorry if I offend you on this, but fair valuation on Tesla is like $50. That's what it is. So I think that the brand is being denigrated. Aside from every other brand, American brand out there that has luxury tagged onto it, I think that there's a denigration factor here. So for me, in my opinion, it's just my opinion, the technical factors is going to be trading back down to 190 and then back down to sub 160. Maybe I think it's tradable. Okay. At that point, I'm looking for the euphoric nature of bulls that are blinded by everything that Tesla has going on, that they don't care about valuation whatsoever. That's tradable, right? It doesn't necessarily mean that I can't buy into Tesla because XYZ reason. It is tradable. And I've traded Tesla in the past. I've caught these runs on Tesla. I've done it a couple times. So when we get back down there, if we're filling the gap lower, because traditionally speaking, we generally fill almost every gap that exists in large equities like this. If we start filling that gap lower, by then I'm interested in Tesla. But that needs to be sub $200, 190, and then ultimately closer to 170 is where I'm particularly interested, okay? Let's go a little bit further. Let's dive a little bit further. Some people have been asking me about Microsoft. I'm not interested in Microsoft despite the fact that Microsoft is a powerhouse. It is literally a powerhouse. I'm not trading Microsoft until we get back down to sub 275. I'm not interested until it gets back down there. That's it. No other comment there. Next is what I would like to discuss would be IWM. Small caps, I thought held up really well today. I'm already allocated in small caps. I think small caps, after all the dust is settled, after all the tariff situation has subsided, whether we're tariffing China with another 200%, or if it goes up to 500%, it's going to subside at some point, right? That's the point I'm trying to make. At some point, off of the weekly time frame, either we hold back down to 165, which is another 20-point drop, which for percentage purposes, it's about another 8-point move to the downside. I think this is going to be on the discount shelf where for me it's sufficient enough for me to allocate even more capital than what I have here on small caps. So in my opinion, if you are not in the small cap trades or if you're not allocated in small caps, I think that there is good potential upside going forward. Strictly talking about risk reward. Okay. So that's what I have there. What else? That's basically it. Let's talk about the trades that I took today. I'm going to share with you everything, literally everything, I'm not going to shy away from anything. I'm literally going to tell you how it works, and I'm going to tell you without showing you the code. That's the only thing that I'm not going to do. I'm literally going to tell you how it is that I'm detecting what it is that I'm detecting, because I like to be transparent. I like, for myself as well, it really does benefit me, the feedback that I get from people, because I can't see everything, right? I don't have eyes in the back of my head, and I'm definitely not that smart. So if someone can see something, a hole in something, and I can't see it for some reason, then I can think about it, and then I can re-engineer the thing in order to improve, because I'm interested in improving my trading system and also the trading systems of our members, right? So we can make more conscious, data-driven trades and decisions. All right, so what do we got? Let's remove our control, our 5 and our 21. These are the following trades that I took today. I took this long position. Why? Because I thought that we were going to get a breakout. Why did I think that? Actually, there's about 4 things that go into a breakout recipe, but 2 of the most important things are going to be volatility spike and also a volume spike. Generally speaking, those breakouts, they come after your entire consolidation. Did we consolidate overnight? No, we didn't consolidate overnight at all. I mean, you can squeeze this as much as you want, but there was no consolidation, right? We sold off yesterday because of that export tax that got tagged on NVIDIA. So when I'm looking at this, the breakout happened at like 4:20 in the morning. So there's a significant breakout there. I don't know what happened, right? Probably need to look into why we spiked, whatever it is, 200, 300 points. So as we came down into this area, for me, this was an area of interest because I was using the pre-market levels. We came close to that area, and then we actually, I would say we touched that area 2 or 3 times, and then we respected that until Powell spoke. So let's talk about this. Let's talk about this. The first trade, I lost $750. I took a long. Why didn't I jump directly back into a short? I don't like trading that way. I don't like going short, long, short. No, then that defeats the purpose of what I'm trying to do. I'm trying to get rid of that whipsaw. Like I don't want to do that, right? So did it signal the short position because it saw, it's going to have a binary switch. It's either going to be long or short, but it doesn't necessarily mean that I have to take every position. Remember what I said when I started. This is not an indicator. It's a trading system. It is in all the boxes that you need to check. If something is a system or not, this checks all the boxes and then some, right? Because it has adaptive features as well. So what is the system here? What am I specifically looking at? I'm looking at a huge volume spike that I'm already pointing out here with my arrow. And then I'm looking at my TTM. So my TTM started driving roughly here. But I know, and you should know as well, that all, including my indicator or including my trading system, including my detection mechanism here, all of it is going to lag. Everything is going to lag price action because price action is the input that you need after you do all the fancy calculations to give you a detective and predictive model for something that you want to trade. That's how trading is all about that. It's probability and statistics. So I get this candle, and this candle pushed, and I thought might be catching on to a reversal. I lost $750 on this trade, right? So it was a 20-point stop, right? Was I too big on the trade per my account size? No, not really. $750, no big deal. I didn't jump into the next trade, although I could have done that. It would have been another stop out. So how many points would have been stopped out here if I'm adhering to all the principles that I'm discussing for a manageable trading system? Let's say I get in half staff, and then I get out of that candle. I lost another 25 points. All right, so right now I'm down 45 points. Cool. So if I'm going to take every single trade that this gives me off of the 10-minute time frame, because I like the 10-minute time frame, there is a natural filtration mechanism that happens when you zoom out, right? You want to zoom out of the time frame. I like the 10 because for me, my back testing substantiates that the 10-minute time frame is a little bit smoother on the curve, right? And I don't have to take 1,400 trades a day. So the next trade that supposedly I would have taken if I'm just following every signal that this gives me is going to be this one right here. So there's a feature. It's built in. It's a real-time feature. There is a scoring system behind the trading system that tells you it's looking for 4 or 5 criteria. It's going to tell you, all right, so this right here is hitting, but it's not a static feature. There's actually a score, right? A score is from 1 to 10, or in certain situations, it's from 1 to 100. Now I'm forgetting how I did the scoring system. But anyway, right, there's going to be a dial-in. So that dial-in tells you literally the strength of the score. So if it's giving you, let's say, volume that's coming in, but it's not a significant amount of volume, and in that calculation, it's calculating slope, speed, all that stuff that's significant. If that scoring system is not strong, then it's going to look at the other 4 scores, and then ultimately it's going to give you a total. If that total hits a specific threshold, then it's going to fire on the signal, right? So that's what it's doing here. This is something that you guys haven't seen yet, right? This is something that I developed in the last couple of days. So that scoring system for me smoothens out a lot of the filtration that needs to be done on the back end. So the higher the score overall, right? Because there's 4 or 5 different calculations that are being done. So out of that, if we get a 65 or better on the test, right? Just using an analogy here for school. If we get 65 or better, then the signal will fire. So it's going to be in a binary sense for sure. But why am I not signaling, or why is this not firing all over the place like the other version of the indicator that I have here? So there's another version of this. There's its predecessor. So its predecessor is version 7. It has more things that are firing. So the scoring system is going to filter out a lot of these, what I would call false positives. Not I call them, it's what they're called. So a lot of these false positives are going to be filtered out because they're not hitting a specific quality score, a quality assessment. So this is a clever feature, something that wasn't here before. Are you going to catch those high spikes in volume and high spikes of volatility? Of course you are. Absolutely, of course you are. But its predecessor was too rigid. I don't want to take 13 signals. No, maybe not 13. I don't want to take 4, 5, 6, 7 signals before I get to an actual legitimate one. So this is a way to filter out a lot of the false positives without using any sort of indication. It's more of a scoring system. It's quite clever. It's not something that I came up with. Other people are doing this as well, but that quantitative approach, I think, is extremely advantageous to this overall trading. So do you see how this is not an indicator? Indicators don't do that. They don't do that kind of that quantitative analysis in the background. That's also why I'm using the 10-minute time frame. Is there a lag on the calculation? No, there's not. The lag is milliseconds. It literally is milliseconds. So this is happening real time. Let's go back. Let's remove that. So cool. I got some short firings here. So I got a shallow signal and I got a shallow signal. What about the next signal, right? The third signal of the day. How shallow is that? So if I'm going to take that off the TWAP, I'm already at break even, right? Let's just say I did 45-point loss, and then the next is 45-point loss. Here, let's say I'm taking off the signal as soon as the other one is printing. So I'm making anywhere between 60 to maybe 80 points on just taking the first 3, the first 3 signals. Fine. So I'm at break even. So remember what I said, right? I've said this in other videos, but I'm going to include this here. I don't want to be taking 7 signals in order to get to one legitimate one. The more false positives I can filter out before getting to a legitimate signal, the more proficient and the more efficient the trading system is going to be. I think that we have that. There's a natural filtration that's going to happen based off of your discretion and also the time frame that you select. But in this instance, I took the first one, so I took a bad signal. Although computationally, it was correct, right? You had a spike. You had a spike, and the CVD was building up. So, in my perception of it, I took a reasonable loss. I didn't take the second one because I don't like doing that, but I did take the third one. Why did I take the third one? Because the slope was still there, right? That's what I'm talking about in slope. There is a slope calculation that's done in the background here, and it's part of the filtering mechanism. So I have that. Took the trade, made, in this situation, I took like 80 points. And then what about the next signal, right? What about the next signal? So the majority of the volatility came in on this candle. Traditionally speaking, if you are a moving average trader, you're going to take the cross on whatever moving average stack that you decide, right? So let's just say I take a moving average stack trade here. The moving average stack that I like is the 5 and the 21. I like to filter that through the 5 or the 10 or the 15-minute time frame. Stick with me for just a second. I know this it gets dense for the computations, but if you understand how the signal is generated, you're going to have confidence in taking the signal. So stick with me here for just a second. There's a cross here on the 5 and the 21, but that's late because the signal came in here. So you missed on a whole bunch of different candles, and this is the 10-minute time frame. There's no 5 and 21 cross here, but these calculations are not being done using the EMAs. It's not doing that. So is there a filtration that we could have put on for this particular signal? Yeah, it is. But you don't want to be too restrictive. If you're too restrictive, especially when volume is coming in, check this out. If you're too restrictive, do you see that? And all of a sudden you get a huge spike right here. It doesn't necessarily mean that all of these spikes are going to warrant a breakout. Doesn't necessarily mean that, but you're putting yourself in the situation where if you manage the risk correctly, then 2, 3, maybe 4 trades that go by, then you're setting yourself up for that larger move. In this situation, how many of those did we go through before we got 2 legitimate trades? It was 2. It was 1, it was 2, a little stop out, and then we have a legitimate trade and then a legitimate trade. You see what I'm trying to tell you? So how many signals am I filtering overall? This is going to do a tremendous job in filtering out a multitude of the signals. And it's going to do that using calculations. If I'm strictly using the EMAs, how many EMA crosses am I generally looking at on the 5, 10-minute time? There's usually a lot. There's a lot of them. And look how much quicker I'm beating that using just a slightly different calculation. Here, there's an obvious EMA cross. I beat that candle by 1, 2, 3, 4, 5, 6 candles. For the time frame that I'm using, it's an hour before. An hour before, that's significant. What about here? So I beat that signal about 10 minutes before, actually less than 10 minutes. Let's be reasonable, 5, maybe 6 minutes. So I beat that before. This fired right here, and then the trade. You just put on the trade and you manage it correctly. Literally manage it correctly. Where's the volatility spike, right? Where most of the quantitative analysis, if you're using sufficient filtration, where's most of that going to be picked up, and where did that happen? That happened on this candle. But notice with the trading system that I'm talking about here, we have that binary relationship, right? We have either we're trending up or we're trending down. It's going to be one of the two. You have the consolidating market, but you can recognize that. How do you recognize that? Well, not being stupid, right? What I'm talking about is just noticing the volume right here. If you're noticing that volume is not really picking up, then you don't have to take every single little signal. Now, if you do start picking up right here, maybe you could have taken that signal. You're maintaining the trend information. It's still there. So maybe you say, yeah, I'm going to ignore this one, but I'll probably take that signal. That's perfectly fine too. I built in a feature where if you get stopped out on your ATR calculation, you can jump back into the trade, provided that you have a very, very shallow stop loss. So that's a feature that's built in here as well. But the most significant development that I've had lately is the scoring system. The scoring system is deeply clever. It really is deeply clever. And there's a sliding feature as well, where if you want your score to be either more minimal or more restrictive, then you can slide that, right? So if you want just a 50% score, then you're going to get more signals. If you want the sweet spot, that's between 60 to 70%. So if you get a 6 or a 7 score or better, if you hit that, then that's going to be filtered through. Or if you get anything better than that, right? There is a granular feature to this. 6 and 7 is too rigid. So now that I'm thinking about it, I did it in increments of 100. So if you're better than 60, if you're a 61 or 60, then it's going to be filtered through. You see what I'm saying? So we got that here. How many points did I catch, or how many trades did the trading system give me to ultimately tell me, you know, were we profitable today or not? That's the question you need to ask. That's what the point that I'm trying to make here. So were we profitable? Here, we're looking at break even, right? We're looking at break even. I got 20-point loss, 25-point loss, whatever. And then here, let's just say I got 50 points. So they're net equal. What about this trade? Let's take that down here. And let's say at the flip of the switch, when that candle is coming in, I caught a 400-point move. I didn't personally catch this because I was working, which I got to stop working. I got to start concentrating more on trading. I got to stop. So 430-point move to the downside, legitimately speaking. I'm not pulling that out my ass. I'm literally telling you how it's calculated. The trend information is telling you, despite the fact that visually it looks like, we're going to be breaking here to the upside, the CBD was absorbed, right? The threshold was saying, you know, we're not really breaking above that threshold. So there was absorption right here. So both the TWAP and also the ATR calculation in the back. the ATR is, there's nothing fantastic about it. There's nothing magical about it at all. There's nothing magical about any of the indicators out there. It's all about the synergetic mathematical relationship of you filtering out shit that you want to see and shit that you don't want to see. So cool. It did that. It did that, I think, extremely efficiently. So where did the start of the trend happen? It happened on that freaking candle right there. So it calculated, and I think in my mind, it did so extremely precisely. It did the one candle and then that cumulative delta. It's so important. That cumulative delta is telling you, all right, we're not accumulating in one direction or the other, because that's the information that it's getting. So as soon as it hit that ceiling, it calculates that one candle, and then that second candle, it's already telling you, okay, now we're stair stepping either up or down. That's what it did right here. That's exactly what it did. So how many legitimate signals did I get today? Well, I would say that I got one legitimate signal, two legitimate signals, and then three. Were we profitable for today? Yeah, we were. We were definitely profitable if you automate something like this. How many points would I quote on that? So you have the one, actually you have two fairly decent trades. These would have canceled each other out. I've already proven that. And then here, let's talk about that. Let's say I get stopped out right here. I don't have that flip of the switch quite yet, but if I want to cut it from the TWAP, that's another 100, and let's call it 130 points. So ultimately you're net positive on the day. How many winning trades did you have? Well, you had 3 winning trades. How many losing trades did you have? You have 2 losing trades, but the net point amount is significant. I've proven that to you. That's off the 10-minute time frame. The 5-minute time frame, you're going to get more granular look into what's going on via price action. So for those of you, no matter how many videos I make and how many times that I tell you that the data supports the 10-minute time frame outperforming the 5-minute time frame, people are not going to care, right? People are going to do what they do, and it doesn't matter what it is I say. This can be even more precise. This is unbelievably precise. It is scary how precise it is. On the 1-minute time frame, the precision is mind-blowing. It really, really is. And you can get more precise than this, right? The machine learning algorithms and the computing horsepower that you can get from the machines that are out there are unbelievable. I don't need all that because I'm trading the 10-minute time frame. I don't need to be that precise or that specific. So how many trades would you legitimately have taken at market open? You would have taken 1, 2, let's say those cancel each other out. Legitimate trade right here. Maybe this might be a net positive, right? I'm not bullshitting you. I'm telling you what it is, right? I've already spent 20 minutes talking about that relationship and why it's giving you a particular signal. So, okay, we have net positive here. We're up 10 points. And then we have a legitimate signal right here. Would you have been cut off? Yeah, probably you would have been cut off right there. So you have 1, 2, 3, 4, 5, 6, 7. 7 trades. Out of the 7 trades, how many of them would have been winners if you're using strictly the 5-minute time frame? So here, you have a net positive outcome, right? You have a net positive outcome right here. What about here, here, and here? Well, it's a net positive outcome for that bunch as well. You would have taken a little loss, and then immediately after that, preceding that, you would have gone into a banger of a trade. It would have been another banger. What about here, right? We can't forget that. So we have another trade right there. So how many of that is in total? I'm not doing the math in my head, but it's a net positive outcome. It really is. So this is actually a profitable trading system for the day. When we do our back testing and when we go back in time, we want to know, all right, filtering for what time frame, for trade management, all that stuff. But hopefully I've been able to convince you just in this one video and all the videos that I've been making with detailing what it is that I'm doing, right? That you can see, well, I can see myself in the seat here, and I can understand how it is that I would manage these trades And if I manage it the way that this guy is telling me, then I can have a profitable system, really, really profitable system. And believe it or not, with the stuff that I discussed, the scoring system, specifically some volatility calculations that have been optimized, the scoring system is probably the most significant development. This has also an adaptability feature. So that adaptation is going to be fluctuating on a band. It's a band scale that fluctuates based off of volume and volatility. So both of those calculations are working in tandem with one another. And on top of that, you have that scoring system. So this becomes a little bit more of an intelligent, it's rather intelligent. It's not AI. I'm not going to say it's AI because it's not. It's not tied to, there's no neural network whatsoever. There's no learning algorithm. There's no preceding score system. It doesn't have memory that's going to tell you, all right, so this was the performance last time. I'm going to ramp up the risk management here and then adjust for this. It doesn't have those features. It's not an AI feature. Maybe at some point, 6 months down the road, a year, I'll get to that. But for right now, I don't need to be that precise. All I need to do is just outperform on the 5 and the 10-minute time frame, and I should be okay. You see what I'm trying to tell you? So that 10-minute and the 15-minute time frame are those significant developments that I have been working on. Aside from that, there's a time frame adaptability feature, which I had on. I had it on when I was doing Power Hour, and it pissed me off because it didn't catch onto the signal. So as soon as I toggled it off, then the signal came in. I got to be careful with that because as you're flipping through different time frames, you have to be able to adjust the settings. There are ways to calculate for it to adjust dynamically and be precise depending on the time frame that you're working on, but I'm not there yet, right? I'm working on that for this version right here, but I'm not quite there yet. So this is the Volume Edge Pro. What I am at, where I'm currently sitting, is the different profiles and the sensitivity ratings depending on what kind of trading style that you want to use. Right now, I'm using off the 5 and the 10-minute time frame, the scalping profile. This has been optimized already better than what it is that you're seeing with a smoothing curve to it. So I can get rid of as many false positives as possible without filtering out the higher quality signals. There's going to be an impedance effect, but for example, if I can reduce false positives by 15% and have a reduction of the overall significance of true positives going through, if that's only denigrated by 1.5%, I think that the trade-off is worth it. Do you see what I'm trying to tell you? So that's currently what I'm working on right now. If you have any questions about what I'm doing or just how we're trading overall, any questions about High Strike or any questions about myself, let me know in the comment section, right? This, more than likely, I'm looking for this to be available in approximately about a month, but I have significant testing that I want to do and some optimizations that I would like to do for storing memory and computations that if I'm computing for the 5-minute time frame, that's significant calculations that are being done. So on the higher time frames, I don't need that much compute power, right? I don't need to go into the shorter time frames to calculate that volume delta. Because if I do that, then this is going to take 15 seconds to load, which I don't want that. Those are things that I'm working on currently. So I appreciate you watching this video. Thank you so much. This is, my video diary for my trading. I'll see you guys tomorrow.